The mistake almost everyone will make in 2026. Let me ask you something and answer honestly. If I asked you right now, what will be the best investment in 2026? What comes to mind? AI stocks, crypto, real estate, the next big tech breakout. That reaction alone already tells me something important. Because the biggest investment trends never feel obvious while they're forming. They only feel obvious after the opportunity has passed. In 1999, people believed profits didn't matter. In 2007, debt felt harmless. In 2021, risk felt optional. Every cycle has its illusion. And today, the illusion is that growth itself is still the answer. But 2026 won't reward growth the way the last decade did. It will reward positioning. This video is not about hype. It's about understanding what phase we're entering and why money behaves differently in each phase. By the end of this video, you won't just know what the next big investment trend in 2026 looks like. You'll understand why most people will miss it, even if they watch videos like this. Because missing trends isn't about lack of information. It's about misunderstanding the system. They don't start with innovation. They start with stress. Here's something most people never learn. Investment trends don't begin with opportunity. They begin with pressure. Pressure on debt, liquidity, trust, stability. When systems are healthy, capital chases growth. When systems strain, capital seeks protection. This is the shift happening now. For decades, investors were rewarded for risk, leverage, speed, optimism. But high debt systems don't reward those traits forever. Eventually, they punish them. That's when investment trends flip, quietly. The next big investment trend in 2026 is not forming because something exciting was invented. It's forming because the system can no longer tolerate the old risks. And when tolerance changes, capital reallocates. Not dramatically, not publicly, but consistently. Why growth no longer fixes anything? Debt used to be a tool. Now, it's a dependency. When debt is low, growth reduces risk. Expansion creates stability. When debt is high, growth increases fragility. Expansion requires control. This is why markets today feel unstable even during good news. Interest rates can't normalize. Governments can't cut spending. Central banks can't exit without consequences. So policy replaces markets. And when policy replaces markets, investment logic changes. Returns compress. Volatility spikes. Liquidity becomes selective. This is the environment that creates the next major investment trend. Not abundance, constraint. Why institutions don't chase. What you chase, retail investors chase returns. Institutions manage survivability. That difference explains everything. Large capital asks, what survives policy shifts? What holds value under stress? What remains liquid when others freeze? Right now, institutions are quietly reducing long-duration exposure, avoiding narrative-driven assets, prioritizing control, jurisdiction, and resilience. This isn't fear. It's math. And math always moves before headlines. The next big investment trend in 2026 is already being positioned for, just not advertised. This is where most people get it wrong. Let's eliminate distractions. The next big investment trend in 2026 is not a single stock, a viral sector, a get-rich-quick narrative, a social media-driven asset. If it were, it wouldn't work. Real trends don't arrive loudly. They arrive uneventfully. They feel bored, conservative, overcautious. Until suddenly, they're everywhere. If an asset feels exciting right now, it's probably already late. This is the framework that matters. Every dominant investment trend shares these traits. It solves the trust problem. It benefits from scarcity or constraint. It doesn't rely on leverage to function. It survives policy, not optimism. This isn't about guessing the future. It's about identifying what the system now rewards. Assets aligned with these traits don't need hype. They attract capital naturally when stress increases. The psychology that sabotages investors. Here's the uncomfortable truth. Most people don't miss trends because they lack intelligence. They miss them because they wait for permission. They wait for confirmation, media coverage, consensus. But by the time consensus forms, risk has already shifted. The next big investment trend in 2026 will feel unnecessary at first. That's how you know it's early. Why positioning always beats. Prediction history doesn't reward prediction. It rewards alignment. The investors who win aren't the smartest. They're the ones positioned where capital naturally flows when conditions change. 2026 won't be about beating markets. it'll be about not being trapped by them. And that's why understanding systems matters more than ever. Because wealth has never been about speed, it's always been about where you stand when the rules shift.